Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Plenty of cues to digest in terms of the market movement when it comes to the US indices. Of course, we saw a very strong comeback by the US indices after a sell-off on Friday. Of course, much of it has to be attributed to the softening of tone by Trump on China. He had threatened 100% tariff, additional 100% tariff on China from the 1st of November. But once again, yesterday he came out and said on Truth Social that, things with China will be fine. So, of course, the bulls on Wall Street took a cue from that, and we saw a very strong rebound on Wall Street. The indices recovered over 2% a piece. In fact, S&P 500, saw its best day in since May rather. So yes, good cues coming out of global markets. Asian markets also fairly mixed. Barring Nikkei, all the other indices are trading in the green. The GIFT Nifty also was in the positive zone, although it was pretty flat. But yesterday, we saw a good recovery from the day's low. We did manage to hold on to the 25,200 mark, even though we ended the day in the red. So the big question, can we build on the recovery that we saw in the second half yesterday? Today, of course, it's the Nifty weekly expiry, so there may be some bit of volatility on account of that. But in the pre-open, things are looking positive. I can see a 30-point uptick on the Nifty, in the pre-open session. But the big, listing today, that's the talk of the town. LG Electronics set for its debut. Remember, it garnered very solid, subscription, 54 times subscription over the number of shares on offer. So that was the kind of interest that LG Electronics IPO garnered. Whether or not it can make a strong listing, will we see a very solid listing pop? That's something we'll discover at 10 a.m. That's the time that the stock lists on the bourses. But yes, plenty of other stocks in focus as well. The likes of HCL Tech reported numbers, good set of numbers, and it is likely to react to that. And of course, your stock related queries will also be in focus, and so will be our special Diwali segment. We'll get you another guest today to share, sparkling stock ideas, or Dhamakedar stock ideas, so to say, for Samvat 2082. So yes, lots lined up over the next 1 hour or so. You can't afford to miss all the action on Money Control. But before I bring on board my guests, and of course, before I take up all your stock related queries, let's quickly take a look at the top headlines at this hour. Wall Street ends the session higher, recovering 2/3 of Friday's losses. The S&P 500 and Dow Jones end with gains of over 1%. Markets in Asia were largely mixed, with the Nikkei trending lower. But of course, investors are assessing the latest rift between US and China, and of course, the softening of the stance by Trump as well. The GIFT Nifty positive, and in the pre-open session as well, we are looking at a mildly higher start. Gold prices hit a fresh all-time high at $4,100 per ounce on the back of trade jitters. Silver also sets a new record above $52.5 an ounce. Meanwhile, crude oil prices rebound from a 5-month low as hopes for easing US-China trade tensions lift sentiment. HCL Tech beats estimates in the second quarter. The company maintains growth outlook at 3 to 5%. Also becomes the first Indian IT services company to report standalone AI revenue. The company says advanced AI revenue exceeded $100 million this quarter. Also watch out for numbers from Tech Mahindra and persistent systems from the technology space. Retail inflation eases to 1.5% in September, touches an over 8-year low and comes below the RBI inflation range of 2 to 6%. The food basket slips further into deflation territory. And all eyes on the big debut today. LG Electronics India will list on the stock exchanges after a bumper subscription to its initial public offering. It was the most bid IPO after receiving bids for nearly 4.5 lakh crore rupees. All right, quickly recapping all the action that we saw in yesterday's trading session. The market ended mixed, but we were sharply off the day's low. At one point in time, we had slipped below that 25,200 mark. In fact, we were staring at a triple-digit cut on the Nifty, but we did well in the second half of the session to recover and shut shop above that psychological 25,200 mark. Global cues were also positive after the tweet from after the comment from Trump on Truth Social. So I think it was also that rub-off impact that came through for us. The bank index, ended in the green. The mid-cap index managed to end in the green, although the breadth was skewed in favor of declines. But sectorally, autos largely ended the day in the green. There was some registration data that came out from Vahan. So reacting to that, and Bajaj Auto, that was the top gainer from the auto pack. A lot of other movers as well. What also deserves mention is the exchange stocks. They saw a big move. BSC, MCX, these are some of the names that rallied in excess of 4%. Of course, there was some bit of news flow. In fact, it was a CNBC TV 18 exclusive, and they reported that SEBI, may of course look at more data before taking a call on doing away with weekly equity derivative expiry. So that is something that had a positive rub-off impact on some of these exchange stocks. Of course, a lot of other movers as well, the likes of Fortis Healthcare, HDFC, AMC, Muthoot Finance, of course, deserves mention as gold prices continue to shatter records. Muthoot as well has been on a gaining trajectory. But in terms of the fund flows, FII net sell figure was meager at 240 crore rupees, and in the previous few sessions we've seen some bit of buying coming in. So the sell off from the fund investors has abated a bit. Whether or not in Samvat 2082 can we see FIIs make a big comeback to the Indian market? That's something that investors will of course be keeping an eye out on. But on that note, bring on board our guest for today. Joining me is Jay Thakkar, Head Derivatives and Quant Research at ICICI Securities. Jay, lovely chatting with you. Just a few sessions away from the Muhurat trading. Things were looking up. Yesterday, of course, we had a down day, but things are again back on track in terms of global markets. Where do you see the Nifty now in the run-up to the Muhurat trading? Do you see us extending the winning streak that we saw last week?
Good morning to you, Nandita, and I wish you a very, very happy Diwali and a prosperous New Year well in advance to you, the entire team of Money Control, as well as on behalf of ICICI Securities, to all the viewers of Money Control. I think there has been a good recovery in the Indian markets ahead of the Diwali, ahead of the festive season, and that's quite positive, I would say, Nandita. The reason which I see is that a few days ahead we saw that Nifty fell for almost by 8 consecutive days in the negative territory and fell from 25,450 until 24,600 approximately, and there was a fall cut of almost 800 to 850 points. So the things had gone quite bad, and Nifty had actually entered back into that range. Nandita, one thing to clearly notice is that in this past 22 to 23 weeks. Nifty has been trading within this range of 24,500 to 25,500. That's broadly 1,000 points range within which we have seen. You can assume as good as this half of the financial year. Or 2 quarters which we have seen Nifty has been consolidated within this range only, and for that the midpoint has been 25,000 data. So we are back above that 25,000, which has been tested for almost 16 weeks out of these 22 weeks. So we are back above this 25,000, indicating that till Nifty managed to hold on to 25,000 levels, probably is heading towards the upper end of the range, that is 25,500. So short-term range would be 25,000 to 25,500 until it doesn't go below 25,000. I think the bias should be sideways to positive. And sectoral, if you see, Bank Nifty in this particular rally from 24,600 until the 25,200, 300 levels recently, which we have seen, Bank Nifty or the banking and financials, which have almost 35% weightage in Nifty. It was 38%, which got reduced to 35% because of the selling pressure. Now that this sector particularly has participated well, Nandita, in this rally. So that is something positive. It's just Reliance and Nifty IT. These are the two mainly sectors, and Nifty Realty. These are the three main sectors of stocks we can say which have not participated and which are weighing pressure on Nifty. Else, 60 to 65% of Nifty looks positive.
Okay, but last week IT had a fairly good run, Jay. Of course, HCL Tech will be reacting to numbers today. TCS numbers were good, but the reaction wasn't all that great. How would you approach, especially after last week's move?
So you're right on that part, Nandita, that Nifty bounced back, along with which Nifty IT stocks also relatively bounced back. But what I'm trying to say is that as far as derivatives data is concerned, we haven't seen short covering coming in IT. So you don't have that short covering indication, which would finally indicate that okay, now things seems to be okay, and we would see a further up move. Once we see that short covering happening in futures, probably IT might also help Nifty to bounce back.
Come back and discuss specific stocks as well. But it's a positive start, as was being indicated by the GIFT Nifty. 70-point uptake, close to the 25,300 mark. Of course, recently we had cleared that 25,300 mark on the upside as well. But let's see whether we manage to shut shop above that level as well anytime soon. Mid cap index looking in fine fettle, 0.4% kind of gain on the Nifty mid cap index. The breadth as of now skewed in favor of gainers, looking pretty strong. Almost 1200 advances to 500 declines, so not bad, but we'll wait for it to settle down before really calling it a trend. In terms of sectors, saw some green ticks on the Nifty bank index, very mild gains, just about 25 odd points higher. And as we speak, it's kind of giving up some of those gains as well. Yes, it's back in the red, the Nifty bank index. But in terms of other movers, want to see what the IT pack is doing, especially given the fact that we had good numbers coming in from HCL Tech, and Tech Mahindra will also be reporting numbers. Yes, the IT pack is looking fairly strong at the juncture, up 1%. Metals, top gainers, 1% higher on the Nifty metal index. Realty as well, up 0.5%. So all the sectors as we speak are trading in the green as of now, barring the Nifty bank index. I think most of them are in the green. So it is looking like a fairly broad based move as of now, but we'll wait for things to really settle. From the metal index, I can see Hindustan Zinc, that's up 2.5%. Hindustan Copper up 3%, Vedanta up 1.5%. We all know that silver has, of course, clocked in a fresh record high as well. So I think Hindustan Zinc, that stands to gain. So 2.5% gain coming in on shares of Hindustan Zinc. In terms of the other movers, then on the index, the top gainer is HCL Tech. No big gains, blockbuster moves as such, but it's up 1.5% nevertheless, and the top Nifty gainer. Metal names like Tata Steel, Hindalco, are also gaining, from the metal pack. Hindalco, as I mentioned, ONGC, Tech Mahindra, Infosys, Wipro. So yes, HCL Tech numbers have had a rub-off impact on other tech names as well. Tech Mahindra, of course, reports today. What is doing otherwise? What's doing well are the likes of Reliance Industries. That stock is up 0.5%. We have Geo Financial, that's also gaining 0.5% or so. Bharat Electronics, the stock has seen some bit of profit taking in recent times. That stock is in the green, and so is TCS. What's not doing well are some of these auto names like Maruti, Eicher Motors, Bajaj Auto. All of these are looking at some bit of profit taking. Some pharma names are also out of favor today, the likes of Cipla, Sun Pharma, Dr. Reddy's, all of them witnessing some bit of selling pressure. From the FMCG and consumption name, we have the likes of Nestle. Nestle, by the way, reports earnings later this week. That's under pressure. Trent is also in the red. You have Interglobe Aviation. That stock was a smart mover yesterday. Today it's seeing some bit of profit taking. No big cuts though, just about 0.3%. Axis Bank is also trading in the red. HDFC Life, SBI, these are some of the other counters that are not doing all that well. Looking at, we were talking about IT, right? I don't know if you mentioned any levels for HCL Tech in particular. In terms of guidance also fairly met expectations, hasn't really revised it. They've maintained it at 3 to 5%. But the big cue coming out of HCL Tech numbers is the fact that it has declared its AI revenues in northwards of $100 million. Of course, AI seems to be the big buzzword given the kind of investments that even TCS will be doing with respect to data centers. But HCL Tech in particular, after the numbers and today's move of 1.5%, and looking at last week's gains, what would you do with this stock?
Right. I mean, that's the only stock which has in fact declared the AI numbers, which is approximately 3% of their overall revenue, and others have not. But then you can take cues from this. So probably it might help to understand how this AI could contribute the overall revenue growth of the IT companies. And particularly talking about HCL Tech, which has seen a decent bounce back right from say approximately 13,000-1,400 levels to now 1,500 plus levels. So it's jumped by 6% from the lows approximately. But Nandita, 1550 is the level to watch out for. I mean, above those levels, the probability of further short covering happening in this stock would be quite higher, which can thereafter help the stock to move maybe even towards the levels of say 1700 plus levels. So 1550 is the level to watch out for. I think above those levels, if the stock settles or closes, would give an indication that probably the short term worry for the IT stocks might have got over, and then you can see some further short covering happening in all of these stocks. But particularly one should be looking as of now until the clarity comes on all of these major IT names, until we see a decent short covering happening. I think the focus is very well on the banking and financials. I mean, may it be Bank Nifty. The critical level, however, for Bank Nifty would be 57,000, and for financial services index would be 27,000. I mean, above those levels, you will see further up move. But then there is where the traction is along with the auto names. So auto and banking are doing fairly positive. But then, the numbers like this will definitely cool off the selling pressure at least. And then the results which TCS had come out with, they said there was not major disappointment by these IT majors. So that is something at least positive in the near term.
Okay, that's the view. Of course, autos, banking stocks doing well. But let's talk about a Just Dial as well. The numbers came out and they were fairly disappointing, so to say. The stock is also reacting to it. Net profit was down in excess of 22%. Revenues, although, were up somewhere around 6.5% on a year-on-year basis. EBITDA, but jumped somewhere around 6%, and margins uh, were largely flat at 28.7% vis-a-vis 28.8%. The stock has been stuck in a downtrend, so to say. It's in fact not very far away from its 52-week lows as well. How are you looking at this particular counter? Is it a good one on the on the short side? How would you approach?
Well, then I would say that first of all, just dial it's a non-FNO stock, so we don't have much of the derivatives data to analyze or comment on it. But then looking quantitatively on that, then recently what has happened is 800 levels has acted as a very critical support level for Just Dial in past several occasions. In last 1 year or so. So 800 levels, still those levels are maintained. I think the stock can bounce till 900 plus level. But if 800 level breaks, then I think it would be a major negative for the stock, below which it can slip to 700 or below those levels as well. So from the short term point of view, if at all there is a recovery in the market, if at all things are positive, short term positive with respect to this particular stock, then I think the risk reward is favorable on the long side or buy side until 800 levels are held. So that's a critical level to watch out for in Just Dial.
Okay, that's about Just That. Also want to get your thoughts on Anand Rathi Wealth. It's reacting very, positively to its numbers. Numbers have been fairly good. But before that, exchange stocks. Last 2 days, MCX has rallied in excess of 13%. Same goes for BSC. Saw very good traction in the last two sessions, particularly from I think yesterday in the second half we saw very good pop coming in on BSC. What would you do amid this renewed momentum for both these stocks?
See, but talking about MCX, the volume is definitely speaks out loud out there. I mean, we have seen long addition. That's the only stock from the entire capital market theme wherein we have seen a clear long additions. The derivatives data is concerned has created a lifetime high today. You see the surge in the prices of gold and silver domestically, internationally as well. I mean, it's skyrocketed. Silver has moved beyond those 50 levels. So definitely, the lot of activities will be with respect to the bullions, which will definitely have the earnings of the MCX with the overall turnover happening on the exchange side, Nandita. So that is one of the reason why we've been seeing long additions here. Now, when it comes to the other capital market names, maybe BSC or maybe angel broking, then I would say that some signs of easing out of the tension of the weekly expiries, at least in the near term. I'm not saying that that might not come, that, weekly expiry will not go away. The chances are very high, or because they have been thinking about it, with coming out with the draft on it. But then they would be definitely observing the changes which they have already implemented for at least 1 or 2 quarters to see what are the effect of the same. So the last derivatives changes which the exchange or the regulators have done, they would like to see the change of it for another 1 or 2 quarters. At least that brings some relief in the short term for this capital market names like BSE or angel broking, because of which you're seeing short covering happening there, because there were a lot of shorts out there. And K Fintech definitely has it's in news as well, because it has acquired 51% stake in one of the Singapore company, which has almost like $26 million kind of asset under administration with them, and has got around 640 plus kind of global funds within it. So definitely will help K Fintech to move higher, at least until 1300 level or so. So we are seeing short covering happening out there. So because of this entire capital market thing, at least having good short-term news or positive things, we are seeing short covering to long build up in stocks specifically. And we are seeing depository stocks also, along with that, participating in the overall momentum of the capital markets.
I have a very pointed query coming in on BSC from Amit Kumar Srivastav. He's holding 1,000 shares at 2050, making making a fair bit of profit here. Wants to know whether he should continue holding on to it or book profits.
I think, see, Nandita, I'm very clear on BSC that 2350, 2350 levels. I mean, that's a critical support. If those levels break again going forward on an immediate basis, also anytime in the future, then I think he should be exiting. Otherwise, he can keep trailing the stop losses and target around 2650 in the near term. So 2650 could be the target, 2350 will be the revised stop loss for him. And if it goes to 2650, at least partial profit booking should be done.
Okay, that's the view then on a BSC. Look at levels of 2650 on the upside and 2350 on the downside, which you can use as targets and stop losses, respectively. Hope that answers your query. Let's move on to the next query then. Dheeraj Sharma. He wants your advice on buying into Reddington at the current juncture for the long term. Your thoughts, because the stock has done well. Last month, last 6 months, it's given positive 20% kind of returns. Last 1 year as well. In fact, this whole year, it's done pretty well. Last 2-3 sessions, it has flattened out quite a bit. Would you advise entering now, or would you wait for further dips to get into this counter?
Well, this stock is relatively trading sideways quantitatively when I see this. Nandita, I mean, it's not that in FNO, it's a non-FNO stock, and I mainly track the FNO names and the large cap names, so that get the overall view of the market as well as the sectors. But then looking at these non-FNO names, then Reddington especially has definitely had a good run up in the past, but then it has witnessed a sharp sell off from 300 levels to 200, and then again a jump from 200 to 300 levels. So broadly, if you ask me, then it's been trading within this range of 200 to 300, and that's huge range. I mean, that's of 50% if you look from the lower base. And within that, the short-term range would be 260 to 304. So that's nearly around 15% kind of a range. So only above 300 is, I think, one should be looking at Reddington from the buying opportunity. Above 300, it will definitely zoom above the all-time high levels. But till 300 levels are not taken off, I think this consolidation might continue, and so the stock might not perform for couple of weeks as well till 300 levels are not taken off.
Okay, that's the view on Reddington. Jay, whichever queries we are getting, we're trying to get them addressed. So some of them may not be FNO stocks, so just bear with us on that. But next stock is Tata Communications. Anandaroop Bandyopadhyay wants to know your thoughts. The stock, of course, has seen a breakout move today as well. It's up somewhere around 5% or so. There were reports that TCS, in terms of building its data center, could be looking at Tatacom for land as well. So I think that is one trigger that really got the stock excited. But on the charts, how would you look at Tatacom? What are the next levels to watch out for here? It's not very far from 52-week as well.
Yeah, then you're right with respect to the news. the short-term support levels for Tatacom comes to 1750, 1770 range, which is 100 points lower from this range because of a sharp move with the volumes which we saw coming in, the last to last trading session that was on Friday. So on Friday itself, the stock rallied from 1700 to 1950 levels. Right, so that was a huge jump with huge increase in volume that clearly indicates the price and volume action. So looking at this price and volume action, the probability of upside increases. One thing just to keep thing in mind is that there are results of Tatacom tomorrow. So we have Tatacom results tomorrow. So I think, I mean, if it continues to hold on to 1750, 55 levels, I mean, the stock will trade with a positive bias. And yes, you are right, it can inch towards its lifetime high of around 2100 levels as well. So the risk reward is favorable looking at the price volume action on the positive side.
Okay, risk reward looking favorable. Hope that answers your query. Couple of more queries then. There's a query from Satya CK, wants to know your thoughts on HG Infra. Long term, how is the chart looking? The stock hasn't really done much in the last 5 sessions. It's been pretty sideways, and otherwise I can see negative returns on various time frames. But if one has to look at the long term when it comes to HG Infra, would you advise sub 1000 rupees now?
I'm not much clear on this stock with respect to the long term, Nandita, but for the short term, I would say the stock has a very critical support at 900 levels. So if 900 levels are held, the stock can bounce till of 1050 levels in the near term.
Okay, expect levels of 1050 in the near term. Hope that answers your query. Uh, there's a query on a mid cap IT name as well. Just thought let's get it addressed. On emphasis coming in from Debu K, the stock has seen a good up move after a flat start in today's session. But last month or so, in the last 5 sessions as well, it's given negative returns. Doesn't look like it participated in last week's rally on some of the other tech names. How does emphasis stack up when when compared to other mid cap names? Persistent is also coming out with
Yeah,
numbers today. So
yeah.
anything that's catching your fancy?
See, I would say that all of this mid-cap IT within this all of mid-cap IT names, where I would focus would be rather on LTM entry, and that is LTIM. I mean, there is one stock wherein we haven't seen one of shorts, and there is a higher probability of an upside from here on. In fact, the prices have not even corrected or reacted much on the downside after having bounced back in the previous up move. So that is looking relatively positive. I mean, as far as emphasis is concerned, Nandita, this stock has been pretty much trading within the range of 3000 to 2600 for a long, long time. And above that also, if you check, then it has again got a very, very stiff resistance around the levels of 3200. So broadly, to consider a major breakout from emphasis, it would require at least 20% kind of a move to call a long-term uptrend in this stock. Otherwise, it would hover within this range of say 33,000 to 2500, 2600 levels for a couple of time until unless this IT overall sector issue resolves with respect to the US and the overall outcome, the revenue outcome outlook basically. And as far as persistent, I mean, his persistent results today, or even Tech Mahindra for that matter has results today. So I think that all of these IT names are really expected to bounce back on behalf of on account of short covering, but I'm not seeing major up move as of now because there's no clear sign Nandita, of IT stocks in fact reviving completely. Till that happens, I think I would like to avoid this space. I mean, I will wait. I will just buy 10% higher, but then with a much of confidence or clarity that okay, this is the downside level below which you are there's probability of the stock moving down. So that comfort is still not there in your of the IT names.
Okay, IT sector is an avoid until unless you get confidence as to whether there has been high conviction move to really get past the sell off. But talk about some of the pharma names. There's a query on Divi's Lab from Nana Prakasam. Today, pharma is under pressure, but the U.S. Biosecure Act really acted as a catalyst for pharma stocks last week. We saw some of these names like Divi's, Laurus Labs, all these CDMO stocks stage a very good rally. Today, of course, some bit of weakness there. But how would you look at names like Divi's Labs particularly?
No, this is one of the stocks which is looking. I mean, you are right. I mean, CDMO stocks are definitely performed quite well in the last week and helped the Nifty Pharma Index to bounce back as well. And Divi's Labs, particularly, I mean, this is one of the stock which I think, has performed quite well once it was out from Nifty. Since then, the stock seems to have almost like sort of doubled, and has been relatively performing quite well. So I don't see much of problem in Divi's Lab until 6,300 levels are held. I mean, there is a very high chance that it again moves towards the levels of 7,000 or plus. Below 6,300 levels, yeah, it might consolidate for some more time, but this is one of the stock which has been a good performer since past couple of years, and there is relatively less sign of topping out. So any dips in Davis Lab also should be further utilized as a buying opportunity only.
Okay, this should be used for as buying opportunities for Divis. But last query then, it's just come in from JM Teja. Wants your thoughts on Vimta Labs. He, I think, holds at 720. In fact, no, he wants to know whether whether he should buy or hold. And I think he holds some positions at 720. How would what would you advise him to do? The stock has given good returns in the last 6 months, but off late has been under some kind of selling pressure.
Yeah, and I think, see, I would like to say that Nandita, the stock is reversed from its 3 sigma. The plus 3 sigma is on the upside. Generally, where you see the momentum basically getting weakened for any particular stock after having rallied quite a lot. I mean, it generally finds that kind of supply or it decrease in momentum once it reaches to the 3 sigma kind of a level, and that too on the weekly degree, on weekly price data. So I think that it's a time for some consolidation in Vimta, and the critical support for it is 650. So if the gentleman has bought at 720, I mean, I would say that if someone wants to add, it would not be adding at 716, just 4 rupees down. Long-term outlook is not that reverse from up to down, but then 650 is the level where, within which 650 to 730. That would be a broader range after a substantial rally within which the stock can consolidate. So you should be buying on dips in those levels to have a better average.
All right, that's the view on Vimta. Hope that answers your query. But Jay, with that, we've come to the end of the query segment. Before I let you go, take us through some of your Muhurat trading picks. I don't think I'll be meeting you ahead of Diwali Muhurat trading session. So do share some of your Muhurat trading picks for our viewers.
Of course, I'll be doing that. I mean, we have come out with the Muhurat picks as well. Nandita, I mean, we can have a special show for the same. I mean, we have released the Muhurat picks from our ICICI Direct platform. So we can definitely discuss those stocks and the short-term ideas, at least, until Diwali could be. Nandita, what I'm really focusing on auto names. A few of them would be Bajaj Auto, as I said, could see a good short covering and ahead of the festive season. So that could be one stock particularly in focus from the auto. So, and as a disclaimer, I would like to say that we have recommended on the derivative segment this stock to our clients as well. Other would be L&T. I mean, it has again bagged an order of almost 5,000 crore with respect to power and distribution, and the stock has in fact managed to surpass 3,700 levels. Derivative wise, we've seen long build up and good closure on the 3,700 call front as well. So now till 3,700 levels are held, Nandita, the stock is likely to inch towards 3,900, 3,950 levels. So there's a good risk reward out there. So that would be from capital goods segment, right? From the PSU banks, definitely SBIM, and as a disclaimer, we had recommended both of these stocks earlier. We have closed these calls, but then we had recommended earlier to our clients. So SBI is one stock which I think positionally can inch towards 950, 1,000 levels as well. Positionally, I'm saying the way the PSU banking overall theme has changed and the overall participation has changed, the kind of long build-up we have seen in the overall derivative segment as well in all of these PSU names. So this, why not SBI? I mean, these large cap and performing quite well and likely to perform going ahead as well. So that would be one stock from the PSU banking pack. I would like to avoid the private sector banks as of now because relatively PSU banks are doing good. From the financials, NBFCs, I mean Bajaj Finance, why not? And has been an outperformer, has been doing quite well. And I mean, we had recommended this call, Bajaj Finance to our clients. I mean, as I said, financial services sector is doing well. So but then we have closed that. But as a disclaimer, I had mentioned that. So Bajaj Finance will do better from these levels. I mean, it can inch towards 1200 levels as well positionally. And from this space, particularly one more stock of the Shriram Finance, which also we have recommended to our clients. As a disclaimer, I would like to say that
Right.
Shriram Finance is a good top quality names, 50/50 name, and I think can see further 7 to 10% kind of an up move. So that will be named from the financial. So I've seen auto, ESU banking, capital
Hmm.
goods, NBFCs financials, and from the metal pack, one can look at the ferrous names. Generally, the Jindal Steel and JSW Steels. I think they have seen a good long build up, from the metal
Hmm.
names. So, from the elevator point of view, these two
Yeah.
stocks are good. And Hindustan Zinc can have a good short-term uptrend because of silver prices going up. So, a combination from all of these
Silver
sector,
move. Hmm.
the trading ideas ahead of the mono picks, and definitely looking forward again meeting you. It's always a pleasure.
All right.
So discuss again the review. Thank you.
Sure, and a whole host of recommendations for Muhurta trading, and of course some positional plays as well. I hope I get to meet you before Diwali, and if we could talk about these stocks in details, we'll see how things really go, and if we can plan something like that, we'll surely do that. But with that, Jay, I would like to thank you for taking
Sure,
out time, and wishing you a very happy
sure.
Diwali. Wish you a very profitable year ahead, a somewhat profitable summer 2082, so to
Thank
say.
you.
And of course, hopefully, we'll see the markets hitting or retesting all-time highs as well. Thanks a lot for joining in.
Sure. Thank
Well,
you. Always a
with
pleasure. Looking
that,
forward.
let's
Thank you,
shift
Nandita.
focus. Sure. All right, looking at the market then, before we bring on board our next guest, we're just about 20 odd points higher now, cooled off slightly from opening highs. The Nifty Bank trades in the red, but the advanced decline ratio is still skewed in favor of the gainers, with the mid cap index also holding out in the green. On that note, let me bring on board a big market voice to understand the market setup, how things are going to pan out in Samvat 2082, and what are some of the themes that you could be watching out for in the coming year. Joining me as always, Ajay Bagga, market expert. Lovely chatting with you, Ajay. And right ahead of the festive season, of course, we know that in the last year, market had hardly given any returns, Samvat to Samvat. Although we've seen some bit of rebound from lows, we're extremely flat in terms of returns. Lots of factors contributed to it. Of course, we had the whole Trump issue playing out, muted earnings, geopolitical tensions. But now there is growing optimism with all the measures that were announced by the government, the rate cut cycle, etc. What do you sense for Samvat 2082? Are prospects getting brighter that we, once again retest lifetime highs? Would you be in the camp that believes that that is possible?
Yeah, definitely, Nandita. Great to be back on your show after quite some time. Uh, I think history has shown that when we have this prolonged downturn without an economic recession or a global issue as such, like a GFC or a 2000 kind of meltdown, when we have Indian market underperforming like this, the next 12 months tend to mean revert and we tend to outperform. So we are setting up well, but have been wrong for the last 2 months. I was expecting with the last quarter that we would probably form a bottom as far as the earnings cycle goes. And with better corporate guidances, this quarter should have been an outperformer for the markets. It's not happened. Again, I think the goalpost has shifted. Probably now we'll have to see September as the bottom of the earnings cycle. A big issue, of course, will be postponement of consumption because of the GST cuts being announced on 15th August and coming into application on September 22nd. So a lot of that 30, 40-day window saw reduced consumption. That will have an impact on this quarter, which has gone by. There was a catch-up trade that started on September 22nd. We have to figure out whether that was enough to take care of nearly 40 days of lost momentum. So we'll wait and watch. But what I'm very clear is that it's more a domestic focused market for now. IT, as you were discussing with Jay earlier, I think IT will turn around. There are these green AI shoots coming in. You saw a big IT behemoth talking about a 1 gigawatt data center being set up. Yesterday, another IT biggie cut out their their AI revenues for the first time. So management is ready for the street to focus in on their AI successes. That's a good first move, I would say, and we look forward to that improving.
So, with the current AI investments being announced and of course revenues also being declared, could that be a major driver? Because we are still taking baby steps when it comes to the AI landscape, right? With whatever's happening right now, in the next 3 to 5 years, can we expect high single digit or early double digit kind of growth from IT, or that's too far out right now?
I would say it is a very big possibility. Again, AI at the Turin conference, a very important or significant comment I saw from Jeff Bezos, where he said, yes, AI is overspending. There is a lot of capex, but it's not a financial bubble, it's an industrial bubble. Like in the dot-com era, you got the fiber optics network set up, and that really helped the internet-enabled companies to do well in the next 20 years. Same way, the fiber optics of AI are being set up with these data centers, with these semiconductors. Then the use cases come in. So it's more of an industrial bubble rather than a financial bubble. That gives confidence that whoever can then use this infrastructure. The data center companies might not make money because you have a very huge capex upfront and revenues will keep falling. There will be obsolescence coming in. There'll be a smarter chip or there'll be a smarter model, like we are seeing Samsung talking about a smarter model which doesn't need such huge chips. So there will be those breakthroughs coming in from time to time. So these very capex heavy companies are the first beneficiaries. It's like the power plant makers, but now who's using that electricity? Who's using that fiber optics? Same way you will be looking at who's going to use that AI, and there our companies are well positioned. It's been a grind for the last 2 years where they have been training their people on AI. Nobody really knows how to make AI make an impact. The MIT research 2 months back showed that 95% companies have not seen better revenues even after implementing AI. We have all seen as consumers how difficult it is to get a bot to understand or an agentic software to understand what is the service issue you are facing. That remains an issue, but it's learning very fast. It's really learning fast. And our IT services companies should transition into that. That is my thinking. So I am holding my position in IT. It has been wrong for the last 2 years, but it will pay off over the next 2 to 3 years.
All right, Mr. Bagga sounding very confident that investments in IT will pay off over the next 2 to 3 years. But another theme. I mean, I don't know whether to call it a theme, but super cycle, so to say, gold and silver, both are on a tear. It's been a phenomenal run. Some of both gold and silver hitting records consistently. Which commodity or which metal are you most bullish on, gold or silver? There's one camp which is pro gold, but then there's another one that's pro silver. Should one invest in both, and what should the proportion be now? And of course also the fact that traditional way is becoming far too expensive. So how should one invest? Look at ETFs, digital gold. How should really one invest?
No, ETFs are the best. They're well regulated. SEBI is having a watch on them. Physical has become very difficult. In fact, physical silver on the wholesale side is in short supply. You are seeing the issues from London to Turkey to Australia, where the physical producers are running out of supply, and the big banks, the bullion banks, are not able to deliver physical delivery for silver. That's the melt up that's happening in silver. There is a clear backwardation. So when that happens, when the spot is much higher than the forward, it just shows you that there is a big demand currently and which is not being met in the physical market. And going ahead, it will even out, is what the market is thinking. It might not even out. Right now, everybody and their uncle is getting into gold and silver. Normally, that is an indication of a topping trend. But again, at $3,000 gold, we really thought that what happened at 1,000 and 2,000, where gold takes a break, absorbs it time wise, and then proceeds upwards. That did not happen. It just rallied right through 4,100. And there, what has changed is the central bank buying. What has changed is the de-dollarization, especially the Trump chaos has really accelerated that. On silver, 60% demand used to be industrial, but now I think 70 to 80% demand is speculative now. So a lot of hedge funds and the bullion banks have been caught on the back foot there. They're not able to deliver, give physical delivery. So they are scrambling to find any physical silver. That's what's happening since the last few days. And that will continue because the physical silver is not there. Does it make the goods which were using 60% of the silver much more expensive? Yes. At 60,000 a kg silver, you could afford to put it into solar panels and stuff. At 1,70,000, and actually, if you go to buy silver today, you are probably paying 2,25,000. So, what will the industries do? They will look for alternatives or they will start recycling. So that is the self-corrective mechanism that comes in the market. Short answer, go in ETFs, but keep looking at the exit because the way it has gone, it is not sustainable. But who am I to tell you? The whole world is buying gold and silver. So right now, I'm just being quiet about it. Keep your position as you want. I am very uncomfortable the way both have gone up. But is it a de-dollarization move? Is it China doing something which will upend the dollar? We really don't know. Is it catching up for the dollar that's coming? It's not showing up. The DXY is at 99. So from 11% down versus the world, it's gone down to 8% down for the year. So dollar has actually gone up on safe haven buying. So very confusing signals, lack of supply, huge demand, and huge speculative and investment demand coming in. So never stand in front of that oncoming train, just join it till it lasts. But what I'm afraid is when it stops, it could see a very sharp correction and there will be widespread losses for a number of years then. But we don't know whether that is that point we have reached or we are 2 years away from that. Very difficult to say that.
Yeah, all right. That's a good explanation. Also the fact that, there's a, shortage of physical silver, which is why a lot of these mutual funds have stopped their taking subscription for their fund of funds as well, right? But there's another area that's garnering a lot of attention is the primary market. We've seen a spate of big ticket IPOs. We have the LG listing just in minutes from now. We had Tata Capital listing. That was a modest, muted debut. But in these the recent issues that have come up, have any of them caught your attention? And for something like an LG, for that matter, given the fact that it is available at a very, very good valuation, did it catch your interest?
Yeah, particular stocks, I'm unfortunately, due to compliance reasons, not able to comment, even if I have no position, but I need to be registered. So overall, what is happening is there's a lot of fraud. LG was well priced, and it's going to be at a premium. That seems to be the gray market, premium that we are looking at. So it should list at a good premium. But overall, if you see over the last 3 months, nearly 50% issues are below their issue price already. So we are in a late cycle on the primary market, and there is a surge coming in. Two or three mega trends. One, Ps are cashing out where elsewhere they are stuck. If you look at globally, Ps are not doing that well, but in India, they are making rocking profits. So they are taking that money off. Promoters are selling out. Promoters are themselves not convinced on the story so much, and they are shelling out their stakes. The third big thing is the entire new economy boom. So people are looking at the tired old economy stocks in India, which are at very high valuations, and they're saying might as well bet on the new economy. So anything that has a new economy zinc to it is getting overbid. I think that's coming in. And fourth, very rare cases where you're getting a decent valuation as you got on LG. So these are the four big trends happening. Huge amount of domestic money coming in. The domestics are giving an exit to the promoters and the PE funds. Normally, that story ends quite badly in the markets, but that's history. So we don't know if this is a new normal. But the good thing is the huge amount of domestic cachet that has got created. So there's a huge amount of domestic surplus coming into the markets. That is helping the primary market to do well. It's showing that India can absorb this, and a lot of India has to be built. That 4 trillion to 10 trillion to 20 trillion, most of it has to be built. And these companies more and more will come on the market to raise money. So the story is good on a long-term basis. But I think right now we are late cycle on the primary, given the valuations that are coming through.
All right, got your point. I know, Mr. Bagga, you can't really share stocks, but here at Money Control, we are doing special series on which are the stocks and sectors to really bet on in Samvat 2082. Of course, if not stocks, which are the top three themes that you are looking at for Samvat 2082? And does consumer tech, all these names like Zomato, Eternal, Swiggy, etc., feature in that list as well, the new age companies?
Yeah, I would say first, of course, auto, there is a big turnaround coming. It has started already with the GST cuts, so that will help. Auto should be an outperformer. Banks, again, they will be funding the economy, so we should do well. Infrastructure spending of the government continues. That 10-11 lakh crores is helping a lot. And the issue is with the private capex, where again it comes back to aggregate demand. So what we really need is massive deregulation, massive cuts in taxes. Only that could, because the government doesn't have the capacity to resolve all our issues. You look at how major cities, the road networks, all those are crumbling despite us. So you have to see wherever I can bet on India without the government being in the equation. Those are the big themes one can look at. And apart from where the government is helping is infrastructure, will be power, will be renewables, and the new economy. There is a lot of interest in that. So momentum wise, new economy.
All right, momentum wise, new economy, and of course, look at sectors where government involvement may be limited. But last question, really, in terms of a strategy, Mr. Bagga, should one chase high growth stocks now, or should one look at value? What would you suggest?
Yeah, I think one is the asset allocation itself. You have to relook at the gold would have gone up. Silver, Indian households hardly held in the financial way. It was all either utensils or puja items and a small amount of jewelry. But again, relook at portfolios. I think the gold valuations would have gone high in the portfolios. We never sell jewelry. So we are very blessed that the $3 trillion Indians were holding in gold about a few months back also has now gone nearer to $4 trillion. So that's a God's gift to India. But relook at the portfolios, get some amount into fixed income. But the third big thing is probably the US market continues to do well next year as well, and we recover. So I don't see worries for us on the stock market side. Even if the world slows down, we have underperformed for so long that we are a catch-up trade globally. And as earnings improve, our valuations will look better for the marginal funds. So I would say Indian equities are also okay. There is a lot of interest into getting into US tech. Now, that is a trade that has worked very well, but it doesn't mean that it will continue to work. So these are late cycle herd mentality trades that are happening, be it gold, be it silver, be it US tech. Everybody that you meet wants to get into these three. Normally, it's a contrarian signal, but it's not worked. Again, that's why I said, is it 97? Is it 99? Or is it March 2000, where Stanley Druckenmiller is going to lose $6 billion for George Soros? We don't know whether we are at March 2000 or we are two years away from that. But the valuations are pointing 217 is the US market cap to GDP. Normally, it's a panic mode, doesn't go that high, and it doesn't end well, that story. But right now, everybody is saying this time is different. We have heard that script in 2000, very big, when 100 PE companies were being bid up. I have seen fund NAVs doubling week by week at that time. And unfortunately, we sold those funds at that time, thinking this time it's different. And that was a
Oh,
bitter
wow.
lesson. So, there at that time it was internet opportunity funds. Now it is AI opportunity funds. So, or gold opportunity or silver opportunity.
Right.
But this kind of frenzy normally ends badly. So I would say asset allocation, increase some amount of debt. India, I don't see an issue because we have underperformed for a long time. But when the global crash comes, we will also be part of it. But we should recover relatively faster. And themes I've given you,
All
value
right.
versus growth, I say
Sure.
India is a growth market. So you have to stay in growth as far as India goes.
Stay in growth. All right, that's his advice. Stay on growth, and of course, lots to learn from Mr. Bagga every time I interact with him. Would like to thank you and wish you a very, very happy Diwali and a very prosperous Samvat 2082, Mr. Bagga. And I look forward to more conversations and more frequently as well on our shows.
No, absolutely. I come whenever you guys call me. So most welcome. Wish you a great Diwali, great New Year ahead, and all the very best, Nandita. Always a pleasure to be on your shows. Thank you.
Thank you so much. Well, big market voice Ajay Bagga with his investment advice for Samvat 2082. And of course, let's take a look at the market. In fact, we've had the LG Electronics listing as well. It's listed at 1,710 rupees. So that's a good premium coming in for LG. Great debut and lots of interest. Of course, the IPO garnered 54 times subscription for the shares on offer. Interest worth 4.5 lakh crore rupees. As the first ever big IPO that has got such a massive interest. 1710. Of course, that's the listing price. Market cap is near 1.2 lakh crore rupees. So yes, that's the kind of listing that we've had, bumper listing, and it did see a 50% pop on listing itself. That's LG. That's how it's made its blockbuster debut on the bourses. But in terms of the market action, then we have slipped into the red. We're now below the 25,200 mark. 40 points lower on the Nifty. The Sensex, although, is managing to clutch on to slim gains. 100 points higher on the Sensex. Mid cap index has also succumbed to selling pressure. The breadth has also turned in favor of the declines. 2:3, that's the NSE advanced decline ratio as we speak. And if you talk about the big laggards today, I think it's the pharma names that are among the top laggards. In fact, FMCG, banks, autos, pharma, PSU banks, all of these sectors are in the red as we speak. It's only the IT, metals and energy and realty slim gains. So these are the 4 sectors that are managing to do well. Alright, time now for our special Diwali segment, then Dhamakedar Diwali Stocks, where we bring you the hottest stock ideas for Samvat 2082 to add that extra sparkle to your portfolio this festive season. Whether you're looking to light up your investments or add serious shine to your portfolio, we've got expert insights and top picks to help you invest smartly this Diwali. Now, the Nifty has gained around 6% so far this year, but returns since last Diwali have been modest at best. However, factors like GST rate cuts, favorable growth inflation dynamics, strong festive demand are once again driving optimism. There's also anticipation of a comeback by the foreign investors to the Indian stock market after being big net sellers this year. Now, experts believe that if a trade deal between India and the US is finalized this fall, the Indian stock market could deliver healthy returns in Samvat 2082. To share some of the hottest stock recommendations this festive season, we are now joined by Narendra Solanki, who is the head of fundamental research, investment services, Anand, Rathi, shares and stock brokers. Well, Narendra, welcome to our show on Money Control. First of all, wishing you and everyone at Anand Rathi a very, very happy Diwali. You guys have put together a list of hot investment ideas for Samvat 2082, and I want your best 3 stock ideas for our viewers on this edition of Dhamakedar Diwali Stocks. Take us through your first Dhamakedar stock. I believe it's a capital market play.
Yeah, good morning and wish you happy Diwali to you and your viewers as well. Yeah, definitely. We have selected a mix of large cap and mid cap stocks, and the first stock from us is capital market stock, which is BSE Limited. And if you see the performance, so there's no doubt that the company has been growing it's been more than 50%, and the derivative segment has also been one of the key contributors to its growth. And recently, we have saw some news coming in regarding weekly expiry. So SEBI has turned more lenient in terms of looking at weekly expiry in a more flexible way. So that has been one of the key factors which had been acting as a headwind for the stock, and that is now seems to be moving away for the exchange. So we assume that the derivatives would again start to show growth from next quarter onwards. And in terms of capital raising platform based fees income, you can clearly see the kind of IPO market we are having right now, the kind of rebound in the second half of this financial year we have been seeing, both in terms of main board as well as SME space. And BSE has been a leading exchange in terms of SME platform. It has already achieved more than 600 SME listings. So the primary market capital raising has been really robust for the exchange this year, especially in the second half. So combining all these 2-3 factors, we think that the good performance and good show for the company would continue for next at least 2 to 3 years. So you can definitely buy it for a long-term perspective. Right now, we have 2800 as the target.
Talking about BSE as a stock, it has rallied somewhere around 50% in the last 1 year. Of course, over a 5-year period, it has given multi-fold, multi-bagger returns. Where are you in terms of valuations here? And of course, you mentioned that there was a regulatory overhang as well, and that's moving in the right direction. But could regulatory, overhang cloud performance going forward, or is that already priced in?
I think it's largely priced in and being active in a regulatory kind of a setup. So there's always an expectation of some kind of regulation actions coming in, especially when the markets are at its extreme. So either the markets are too exuberant or either the markets are too negative. So in those extremes, there might be some kind of a regulatory support or actions which might be coming because it is operating in a key area. But having said that, I think the regulator, if you see the historical actions as well as the commentaries of the regulator, so it has been more supportive and it has been trying to strengthen the market both in terms of participation as well as bringing depth in the market. So it is all the more positive for the good health of the market. So I don't see any structurally negative for the company as well as far as regulations are concerned.
All right, that's the first recommendation then. BSC, regulatory overhang, already priced in, things are moving in the right direction. And of course, take note of the target that's also mentioned by Narendra. But Narendra, what about the second recommendation or your second bet? Is it from the auto ancillary basket?
Yes, definitely. Auto segment is one space where we are very much positive on, especially after the announcement of GST rate cuts and the kind of data we have seen in terms of sales numbers for the Navratri. We are very optimistic about both automobile stocks as well as auto ancillaries, which are acting as a key backbone suppliers for all these auto companies. So in this space, we have brought out FIAM Industries Limited. It is into manufacturing of lighting solutions for the auto companies, both two-wheelers, three-wheelers, and passenger vehicles. Gradually, it has been increasing, trying to increase its content per vehicle in lighting solutions. It has also added to its portfolio LED lighting solutions, and we are hopeful of this content per vehicle as well as LED lighting solutions to add more share in its revenue going ahead. And in terms of capex, the company has already undergoing a capex of around 75 to 100 crores in its new plant, which is SMT line, a part of its 200 already announced crore capex. So we expect that this capex to come online in next financial year, and then we can see its revenue profile improving from there onwards. So you can also have a medium to long term positive view on this stock. Right now, we have target of 2,450.
But how transformative could the passenger vehicle orders be in reducing its two-wheeler dependence over the next couple of years? And how does this stock stack up versus its other listed peers?
See, in terms of valuations, if you talk, so it is very attractively valued at FY27 earnings. I think it is valued at around 16.57, 17 times earnings, which is decent for the kind of the size this company has in terms of revenue as well as market cap. And yeah, the shift would be gradual. We currently see that the content per vehicle should improve by 3 to 4,000 rupees in next 1 year. So it would be slow and steady. And as and when the new capacity comes up, I think the operational leverage that company would be getting in terms of improvement in margins, and so that would be significant. So yeah, going ahead in 2 year down the line, we see good improvement and shift from two-wheeler to passenger vehicles as well.
All right, that's the view then. Coming to your third and last recommendation, of course, GST cuts would also benefit the logistics sector as well. I was just going through your recommendations. I think Blackbug or Zinka Logistics erstwhile is one of your recommendations. Take us through your targets and rationale here, and also the fact that the stock has already seen In fact, it has doubled in the last 1 year. So, given that, would you still be comfortable with its valuations?
Yes, see, this is a space which, again, we are very positive on. And if you see the business model of this company, it is focusing on India's growing sector, which is the logistics sector, and it is acting as a solution, technology-driven solution provider to the logistics sectors. And it offers a platform to the various logistic companies, be it organized or under unorganized sectors, especially in the trucking industry, and is a kind of a niche player. The model is also very asset light, so there's a lot of operating leverage play which is going to happen as and when the number of users increase, because the largely the fixed cost in these kind of models remains the same, and when your user addition surpasses a certain threshold, all your revenue stands to move. Gets converted into your operating profits and then subsequently into the profit after tax. So we currently see the user additions to pick up pace as we see the digitizations taking effect. In fact, the company also offers fast tolling solutions. So as we have been seeing that the government is also moving ahead with a lot of technology implementation in the tolling systems. So again, this would also add to the business model of the company, and this would also add attraction to the number of higher user additions for the company as well. Also, the company is constantly looking at unlocking value through different digital innovation in the Indian trucking market. So not only it provides logistic solutions, but it also provides tracking, tolling solutions, fast tech solutions. So a lot of value addition the company is doing on a timely basis. So definitely, yeah, we are very much positive on the stock with the long term. Plus, on the valuation front, if you see, right now it could seem like on a trailing basis, it could be seen as a highly valued. But yeah, if you see the kind of growth runway the company has in its future, and plus, like I said, this fixed cost kind of a model, where asset light model, the incremental revenue, the larger share passes to the profitability. So that gives more runway in order to company to add more earnings for the investors. So in this kind of a model, the opportunity for higher growth remains very much there in medium to long term. So right now we have a target of around 860 rupees with this stock.
All right, that's an over 25% upside from current levels. So those were the three best stocks coming in from Anand Rathi Share and Stock Brokers. It was BSC, it was FIAM Industries, and it was Black Buck. But tell us, in terms of a tilt for Samvat 2082, people who are looking to reorganize their portfolios, should the tilt be more towards mid caps, or should it be more towards large caps? At Anand Rathi, what would the suggestion be?
Yeah, see, I think we should have a balanced approach. Yeah, definitely a larger share of your portfolio should be in mid cap and large caps. Right now, we are more positive on on the stocks which are nearly transferring from small caps to mid caps. So not exactly the categories which are sitting at a place where they are in between mid cap and large cap. So we are more focused on stocks between small cap and mid cap category, because you have a huge growth runway for these kind of stocks. The base is low, the operating leverage kicking in for these kind of businesses is very high. The order books are very high, and if the execution picks up, so these stocks offer a large growth opportunity for investors as well. Coming to the large cap, we do not see anything negative happening, but because the base is very high for most of those kind of stocks, the growth would be moderately. Although it should be picking up from here onwards, but in terms of the percentage growth or the overall earnings growth, we see that the small cap and mid cap offer much better opportunity in comparison with the large caps.
Okay, mid caps offer better opportunities. But in terms of themes, particular themes, what are the top three themes that you guys are looking at?
Yeah, so our basic theme, the macro structure has been consistent. we are looking at companies and businesses which are more dependent on the domestic market front. And within these macro theme, the sectors which we are very positive are autos and auto inquiries first. Second, in healthcare, we are positive on hospitals as a sector. And the third, which includes our electronic manufacturing services, which includes our durables, consumer electronic plays, and which also includes our defense plays. So there are a lot of there are companies which are operating in these spaces. So this is our third space where we are positive for medium to long term.
All right. And what about food delivery companies like Eternal, Zomato, Eternal, Swiggy, etc. High growth names. Would you be looking at that as well?
Yeah, definitely. We have been recommending these stocks to our clients already, and they have shown good performance so far. So we still continue to remain positive on the stock. And right now, our approach is that since the run-up is the catch-up play has already happened, so we are just waiting for the further results, and then we would assess again our situation, and then we will decide. But yeah, overall, we are positive on this segment as well.
All right, that's the view. Top sectors, top stocks. To add sparkle to your portfolio. With that, would like to thank you, Narendra, for taking out time and joining in. Here's wishing all of you at Anand Rathi Share and Stockbrokers a very, very happy Diwali from the entire Money Control team. Thanks a lot for taking out time and joining.
Thank you.
Well, with that, we've come to the end of this Diwali special, Dhamakedar Diwali Stocks. Of course, stay tuned to Money Control for a whole lot of special, coverage and special recommendations from special guests on Money Control. You can't afford to miss that. Stay with us and, of course, have a great trading day as well. Thank you for watching.